All right, so for this video, I wanted to cover the IRS Form 1099-Q. So what is it? Under what circumstances do you receive this? And then do you have to do any kind of reporting on your Form 1040? So a 1099-Q is a cash distribution or payment from a qualified education program, right? So Section 529 plans, those are what people are most familiar with. And 529 plans are basically college savings funds that are set up by parents for their kids, and you put the cash in there, and it can be invested in stocks and bonds, interest-bearing accounts, and the income grows tax-free, so you don't have to pay taxes on it. So if we look at an example here, John creates a 529 plan for his son Mark. Mark is going to be starting his first year of college, and he needs $5,000 for qualified tuition and other expenses. So what John does is he goes to the 529 plan, he goes into the account, and he requests a distribution of $5,000, and then he uses that $5,000 to pay for the first year's tuition. Okay, that's perfectly normal. That's okay. Now, once he does that, the plan custodian, so whoever holds the account with the 529 plan, has to issue a 1099-Q to John to report the distribution, and a copy of this goes to the IRS. Okay, so the 1099-Qs, it's very similar to 1099 div for dividends, INTs for interest, Rs for retirement distributions, and so on. So once John gets this 1099-Q, what does he have to do? Well, it really depends on how the funds were used. So generally, the 529 plan distributions are completely exempt from tax, so long as the cash is used to pay for the college education expenses. So if you use the distributions for college tuition, you'll still get a 1099-Q, but there's no need to report anything on your 1040. Okay? Where the reporting comes into play is if you use either all or a portion of the funds for non-qualified expenses, and so that's what we're going to get into here. So first issue, so the couple issues, right? The first one is if you withdraw the funds for a purpose other than the qualified education expenses, you're subject to a 10% penalty on the income amounts that were used for non-qualified purposes. And you have to pay income taxes on the earnings that accumulated in the plan. Okay, so I think we should look at an example here. Right, let's look at this example here for the non-qualified withdrawal. We have Susie creates a 529 plan for her daughter Alice. She puts $10,000 into the 529 plan, and the funds are invested in an index fund which appreciates in value to $11,200. Right, so there's a $1,200 return on investment. That's dividends, capital gains, interest. Well, after the fund reaches this valuation, Alice decides that she really has no interest in going to college. Right, so Susie says, well, the money's in there. I guess I'm just going to take it out because we're not going to be able to use it for college education. So Susie withdraws the full amount, $11,200, and then she gets a 1099-Q for the distribution, right? That's required. So what are the tax issues here? Well, on Susie's Form 1040, because she took the money out and used it for a non-qualified purpose, she has to report the investment gains, $1,200, as taxable income. Okay, so the principal amount of 10 is not subject to tax because those that cash was contributed as after-tax dollars, right? So principal goes in, it comes out. You're not paying tax on those amounts, but the accumulated earnings you do have to pay tax on because the whole point of the plan was to not pay tax on the earnings. You took the money out and you used it for a non-qualified purpose, and now you got to pay tax. So the $1,200 in ordinary income is reported on Schedule 1 of the Form 1040. So it's Schedule 1, Part 1, Line 8, Other Income is where you would report the amount of income that's subject to tax. So that would be the $1,200 for Susie. Now, the second piece here is the penalty component. So on her Form 1040, she's also got to include a Form 5329 to compute the 10% penalty for the unqualified withdrawal. The 5329 is also used to report early withdrawals from IRAs, so that's where it might be familiar to you. If you had an early IRA withdrawal, you would have to complete 5329 to compute the penalty or a waiver, right? If you qualified for a waiver. But in this context, she's going to have to add this form to compute the 10% penalty. Now, the penalty is calculated on the amount of the distribution that was included in income. So in Susie's case, she had $1,200 in income. So the penalty is going to be 10% times $1,200, which is $120. So all in, Susie's income tax return is going to report $1,200 in income, which is subject to tax at whatever her effective rate is. And then she's taxed on a $120 tax penalty that gets paid with her Form 1040 tax return. Okay, so that covers it. I hope that was helpful. If you have any questions, please leave me a comment below. And I look forward to seeing you again soon. Thank you.